Wow. MSTY has been averaging almost $3 per share per month. This is not per year. Both of these ETFs give a monthly dividend. An extraordinary amount of money each month is distributed to shareholders. BITO is giving over $1 per month, and that's phenomenal. MSTY is giving almost $3 per month over the last 12 months. Now I'm going to give it a caveat. This can change. It can go up, it can go down. In this video, we're going to discuss MSTY and BITO. We're going to do a comparison. What is better? They both have an amazing dividend, and they're both really popular in the markets at this point. They're both Bitcoin type of related ETFs, but we want to compare which one is better. I recently did a video on BITO, and I claimed it was the best dividend play in the market, period. And some people had some pushback and said that MSTY is better. So in this video, I want to do a comparison to determine which one is better. And I'm going to give my opinion at the end. So let's jump into this video. And just like the previous BITO video that I did, we're going to base it on a blog post that we put on DorianTrader.com. We're going to go to that blog post and I'm going to kind of give you my opinions on it. And then once again, we'll have our decision at the end. So we're going to go to DorianTrader.com. And then we're going to click on resources, and then we're going to click on the blog. So depending on when you're looking at this video, you want to look for the blog post that's on BITO versus MSTY, which dividend play is best. So let's break down this blog post. When it comes to high yield ETFs, the discussions is often around BITO versus MSTY. BITO is the first Bitcoin ETF, and STY is the YieldMax MSTR Options Income Strategy ETF. Now, MSTR is a stock that specializes in buying Bitcoin directly. They used to do some software and they still do a little bit, but their primary kind of glory these days is their buying of Bitcoin, actual Bitcoin. MSTR is now, used to be known as MicroStrategies, is now known as Strategy. Previously, we wrote about BITO in a blog post, like as I mentioned before, where we argued that it is one of the best dividend plays in the stock market, especially when combined with the right option strategy that we teach at Dorian Trader. We also created a video on the topic, which sparked some debate, as many believe MSTY is actually the superior dividend play. In this post, we will compare BITO, also known as BITO, and MSTY, analyzing their respective strengths and weaknesses before providing our opinion on which ETF offers the best dividend opportunities. Understanding MSTY, the YieldMax MSTR Option Income Strategy ETF. The YieldMax MSTR Option Income Strategy is an actively managed fund designed to generate monthly income through covered call strategies on MicroStrategies Incorporated, MSTR. And as I mentioned, MicroStrategies is now known simply as Strategies. Their primary goal is to buy Bitcoin. That is their claim of fame, like I indicated. So this strategy, MSTY, is a single stock ETF, which is very risky when you, because it's not diversified. So when you just focus on one stock, it can be very risky. But since the one stock they're focused on is related to Bitcoin, if you believe Bitcoin is going to be around into the foreseeable future, then this stock has little possibilities of going to zero. Doesn't mean it can't. An ETF, as I mentioned in the previous video, ETFs can go out of business because they're managed by people. ETFs can go out of business. It's usually close to a 0%, but it's not zero. So you want to make sure you understand the risks when you're dealing with any type of investment, but especially with investments that have a very, very high yield. It's got to be some twist sometime. So you have to understand the risk. MSTY focuses on capturing compelling yields while maintaining limited participation in MSTR's price appreciation. MSTY's investment objectives. 1. The primary objective is to generate consistent current income. So that's great. We are all about generating consistent income that we can depend on. The secondary objective is to provide exposure to MSTR's share price while capping potential investment gains. Now, once again, this is a single stock ETF. Most ETFs are a basket of stocks. What is new about this and new to a lot of investors is that you can actually have a ETF that's a single stock. It's based on a single stock. It's some popular ones out there, one on Tesla, one on Amazon, one on Coinbase, things like that. But the most popular one right now is this MSTY one, and we'll explain why. Given that MicroStrategies, once again known as Strategy now, is heavily involved in Bitcoin holdings, MSTY's performance is directly influenced by Bitcoin's price movements, albeit with a different risk-reward structure compared to direct Bitcoin ETFs. BITO versus MTY, a head-to-head type of comparison. This is what this blog is all about. This is what this video is all about. A head-to-head kind of comparison. Which one is better? We'll give our opinion at the end. To determine which ETF provides a better dividend opportunity, we will compare BITO and MSTY across several key metrics. Number one, we're going to compare it to their dividend yield. That is one of the most compelling things about these two ETFs is the dividend yield. So let's compare the dividend yield. BITO currently offers an annual dividend yield of 50% based on the last payout. This is based on when this blog post was written. Could be more now, could be a little less. Same with MSTY. MSTY boasts a significantly higher annual dividend yield of 95%. So 50% is nothing to sneeze at, nothing to be disappointed about. But 95% is definitely extraordinary because 50% is extraordinary. So the winner in this case is MSTY. They give the better yield at this point. That can change, but as the time of this writing, MSTY is giving a better dividend, almost twice the yield of BITO. Number two, we're going to compare the monthly dividend payouts. BITO averages around $1.15 per share per month over the past 12 months. MSTY averages about $2.88 per share per month. Wow. MSTY has been averaging almost $3 per share per month. This is not per year. Both of these ETFs give a monthly dividend. An extraordinary amount of money each month is distributed to shareholders. BITO is giving over $1 per month, and that's phenomenal. MSTY is giving almost $3 per month over the last 12 months. Now I'm going to give it a caveat. This can change. It can go up, it can go down. So the winner in this category is also MSTY. It's giving a bigger absolute dollar amount per month. Number three, let's now talk about the dividend stability and risk exposure. BITO derives its dividends primarily from Bitcoin futures contracts. While it does employ swaps and short-term treasuries, the dividend's stability is directly tied to Bitcoin's performance. A falling Bitcoin price could negatively impact BITO's payouts. MSTY generates income through selling covered calls on MSTR, on Strategy. Since MSTR's performance is also influenced by Bitcoin, MSTY is still somewhat exposed to Bitcoin price swings. However, due to its income strategy, it can still produce dividends even in bearish Bitcoin markets. So what this means is that because this is a single stock ETF and the ETF is writing calls, selling what is called covered calls against the actual shares in the company, in Strategy, it has the ability to produce a dividend even when Bitcoin is falling. It can manufacture its own dividend. BITO pays out based on the appreciation they receive primarily from the Bitcoin futures contracts. So if Bitcoin is going up, BITO is making appreciation and then they pay out those gains to the shareholders. Yeah, they do swaps and treasuries as we indicated, and that's a way they can pay out some income or dividends to shareholders as well. But it's primarily derived from the futures contracts going up. The futures contracts going up. So the winner in this category is MSTY. It has a slight edge due to the covered call strategies. The covered call strategies tend to provide more stability and dividend payouts. Let's discuss point 4, options liquidity and trading strategies. BITO features good options liquidity, making it viable for a range of options strategies that can enhance returns or protect capital. MSTY has poor options liquidity, limiting its usefulness for active traders looking to hedge or optimize returns through options. So the winner here is BITO. BITO wins this category. The first and the only category that BITO wins in our comparison, because BITO has better options liquidity. With better options liquidity, it allows for greater flexibility in trading strategies. And it also allows you to incorporate a strategy that we teach here at Dorian Trader that can protect your principal. And that is key when trading. And we'll discuss that more here now. So our verdict, which ETF is the better dividend play? While MSTY offers a higher dividend yield and larger payouts, BITO's superior options liquidity makes it a more attractive choice for traders who want to implement strategies that protect principal capital. Since protecting capital is the most critical aspect of long-term investing, we prefer BITO over MSTY, despite MSTY's higher dividend potential. So let me make this clear. MSTY is amazing. It's giving out major payouts each month that can be income life-changing for a lot of individuals out there, a lot of traders out there, a lot of investors out there. But the main thing about trading and investing is protecting your principal. And here at Dorian Trader, we have a way to play these type of high dividend yielding stocks, but to protect all, or at least close to all, of the principal, so that you can depend on this yield without worrying about your principal. And so, as I pointed out in the previous BITO YouTube video and blog, it's unique. It's super unique because most high dividend paying stocks have poor options. The options are poor, so you can't really structure things to protect yourself. You can't trade the options because the liquidity is poor. BITO is the exception to that rule. MSTY is not. It's hard to trade the options on there, at least at the time of this video and writing of this blog post. And I don't see that changing down the road. It could, but it's unlikely. BITO, however, at this point, the options are good. They're not great, but the liquidity in the options are good enough for you to protect your principal. We can teach you how to do that during Trader. Just use the code in the description area, the YouTube coupon code, and then to give you an amazing trial period to try us out. You can learn how to make consistent monthly income through plays like BITO and MSTY. We can teach you how to do it. Now, some of you might have a sole focus on maximizing your yield, and you might be comfortable with its risk. And so in that case, MSTY might be a better choice. If you believe that your principal is not going to be at risk and that this dividend supersedes that principal risk, then clearly MSTY is the better play. Ultimately, when it comes to BITO versus MSTY, as it regards to the best ETF, it depends on your investment goals. If you want higher monthly income, MSTY is the better option, as we just indicated. If you value flexibility and capital appreciation, then BITO is the smarter play. So we trade both here at Dorian Trader. We think both are awesome, but this video is a comparison. BITO, in our opinion, is the better choice because of the options. We are an options education firm. And we believe that options give you so many choices to make money efficiently and protect your money efficiently. So for us here at Dorian Trader, having yields, having appreciation, all of that is awesome. But the most important thing is option liquidity so that we can have, no pun intended, a lot of options. This is our viewpoint. This is our stance. You make the choice that's best for you.